Hello and welcome. Today's date comes in that of, well, it's now Tuesday, the 25th day of February. We're entering that date, 2020. My name is Derek. This is the Money Charts channel where, like always, all bets, trades, and of the like within each his own risk and their own reward. For myself, risk reward management is always job number one. I'm going to start off within rice futures. Take a look at some other things. The stock market having an interestingly volatile day as well. Gold and silver, go over those markets. As they've been moving. We're in a very, very interesting time. And this is one item that I think just makes sense, that if you can store it, it's not a bad idea to acquire. The price of rice might skyrocket here, as with this pandemic in China. I think it's going to be a very serious one. The biggest in 100 years. The world's largest. I know. I mean, I haven't looked at anything much other than the fact that I know China's like the most largest supplier of rice, and it's not going to be. It's not going to be a surprise to me if there's just shipment problems. Just a lot of different items. There's going to be so much. I'm going to be thinking about just going to the store and just walking down the aisles and buying 4, 5, 6, 7, 8, 9 times more than I normally would in a trip. And literally, I got so much storage space I can buy, like even if it's just like 10 or 20 notebooks, just something I know. If I can use it the next 2 years and I know it's going to stay its hold its value in that time, I'll pick it up. And of course, rice is something that can be held for the long term. And buying, of course, the physical commodity, just buying food in itself. Double bottom, triple bottom, however you want to talk about this. As far as chart analysis is concerned, we got number one in here. Then we have a second one in here. Then we have whatever this one here, but this is number 3. And I mean, resistance, and we're at resistance right now within this monthly chart. I can see how we've had the 3 little moves on this and how it's holding. This is just looking relatively strong, and I wouldn't be surprised breaking out. If that does break out above this 18 average and gets past the sideways consolidation pattern. Let's move on next to the Dow Industrials, which endured a down session of 3.5%, down 1,000 basis points to right now it's at 21,184. As we take a look at this on the hourly time frame, and this tracks what happened even before, because the market gapped down, and well, this shows the futures before that. The sell-off occurred at 2 o'clock in the morning. And for at least that little while, stopped at 5, a little more small leg lower, has since had a small correction to neutralize the 18 amongst, of course, the single hour term. You can call this a double top in that it's pierced below, noticeably pierced below the neckline, and it's holding in there. Well, these lows come in at 28,166, which means we're pretty much at that exact same price right now. As far as this on the monthly chart, it's still holding above this rising 18. The only action since it lifted off from here in November of 2017, we went below it here in this stage. I struggled getting above it, but holding within it here, and then getting out above it here in November of last month, and well, of course, still above it at this stage. So all this move here, there's a long ways to go to say, oh, that's just a panic sell-off, at least based on the charts. How everything with the China situation, global really for that matter, but the stock market, it's going to be, it could be wild and interesting as far as market reactions to all the things going on. And now on to the metals. Gold for the month. And last month, month of December, it was up 3 2/3%. Last month, 4 3/4, up a little more. Right now, up almost 4 3/5, or 2 5 rather. But more importantly, nice uptrend up to this key Fibonacci level, 76.4%. From this $20,000 high and this low. And of course the retracement from here to here is barely anything at all. We'll take a look more at the long term in a little bit, or longer term even, but as we can see in here, since it broke out, it had exitation leaving at around 1,300 and a half. in June of last year, it has just continued to move in this uptrend, well extended amongst the 18 average. And I'm going to be drawing some trend lines in here because I did this early in the day, and it's still got a decent amount of ways to go, I think, before I think we are going to hit what could be a dangerous one. But before then, let's take a look here with this daily chart. We come up to, well, first, just an amazing move starting right around Christmas last year, and then establishes this high in January the 8th. From that, it corrects only from the 1600 high in this low, only down to 1536, piercing well noticeably above the 1522 handle. Sort of like it never even came close to coming back to this 1322 on this correctionary move. But establishing this resistance, and here the 2 dates of January 6th and 8th, retesting it from January 27th, and then this last high February 3rd, breaking down, but successfully correcting, and then exitation again here on February the 18th. And that's when this all started. It's just been nonstop. We've had just amazing continuous day in, day out gains, breaking by this resistance range of about 1585 to 1611 along the way. And as far as the trend line is concerned, and I'm going to go like this, and like this. What I want to do is want to look at a trend that connects these key moves in here. So what I'm going to do is I'm going to push print screen on my calculator, and then use a calculator, my keyboard, and then use a notepad, not notepad, but paint, to paste this screenshot. And tactically, this is what I did before when it was just at this level, and I was like, oh, it's got a long ways to go. So that was a long time ago. I mean, that was just my earlier work on it. So using the same thing again, obviously it pierced extra above that line since I drew it last. What I want to connect is these key points and these together. That's what has to be done. So how much of it can we do? And we can see in here that there's just a little bit of a ways before we're talking not only at least about testing it, but even a clear break of that resistance. But what would that mean? Well, what would it mean when you break an uptrend resistance line to the upside? It's a very rare occurrence. Usually, if you're even able to get up to another test of this, because the rate of ascent keeps this price increasing on a day-by-day level. So that's just difficult in itself. And then it's going to be common, if anything, where you'll pierce above it, and it'll just be like resistance and something like that. That becomes normal. So to be able to stabilize and hold and continue even further when you get up to these points is a difficult task. But in situations when it has a monstrous move, and just you can see breakouts from this point that can be extremely explosive when the rare situations exist. So we'll get more to that in a little bit, but before we do that, just a quick look at the hourly time frame that has just had this fantastic move. One of the things I suppose I could do is use this to draw my Fibonacci lines in, and this to me is just the obvious. So what high and what, okay, what, yeah, it's these lows. I mean, look at how many lows were hit here at this level. We have like 3 of them here, so I'm just going to use, this is silver. We'll get to silver in a bit. But I'm going to use the exact same type of Fibonacci here. So I want to use the breakout lows. So which lows can I choose? We got all these lows here at 1550. These lows here at 1530. I really don't want to use these breakout lows at 1563. It's not like it just started there and had a big move, and it's been more tested amongst this level, that I'm going to go ahead and use 1540. And I'm going to put that in my calculator. And I'm going to go ahead and get this high in at 1687. Let's just see what this I mean, what if it makes a difference if I put 7 or 8 in? 1689 even. So for key numbers 1630 and 1595, let's go ahead and just find those numbers. So if we have any more further corrections, that's probably where the next key area is going to be found. Now the 76.4 representing a 23.6 down correction. That comes in at 1653. So roughly around here, which is where we've been bottoming, now consolidating amongst still. This is a noticeable, close to a 50% retracement between the two Fibonacci lines, but not a 50% retracement. And I don't call it a Fibonacci retracement, it's a 50% retracement, because I don't know how Fibonacci mathematically is, or how it's categorized on a Fibonacci mathematical level. But 50% retracements could be definitely interesting as far as for market movements, or how you can study what they can mean and things like that. 1595 is the next level. And I calculate Fibonacci like different than most people do. I use high divided by low to the exponent of the number, multiply the low, rather than high minus low, multiply the Fibonacci plus the low. That level I don't like, because that's linear. So this level here, does it coincide with this level of resistance? Yeah, because it appears in between these two. It's this high in here. So within it, as we can see, the 1 hour time frame, that this is hanging in there with this newly declining 18. We've had now one test here, 1, 2, 3, 4, 5, 6, 7, like 8 different hours, 8 different periods doing this, holding and staying within it. That it's just got to get up to 16 2/3 and stay and hold above 16.56, stay in that $10 range just to neutralize the situation, even up to 16.68 to neutralize it. And it's got to get up to 16.73, 16.75 area to even talk about, oh, the resumption of what this beautiful uptrend has been is back in play. For the more often that we test within this 23.6 range, the more likely it is we're going to probably go down and pierce below that of 1,630. A 50% retracement would come in at around 1613. Okay, Fibonacci lines removed. We changed the exchange now back to the gold futures. So let's take a look at, I mean, if we break this uptrend line, I mean, that looks kind of sick to me. On the monthly chart, that means what would be happening, and this is not going to be anywhere near a straight line, but yeah, not even close. Oh, that's much better than I expected. But when you're breaking this type of stuff in here, after a situation from this low, this high, this correctionary phase, again, barely correcting much at all. And then we've had now a move that's coming to this high. We've already had this outstanding rate of ascent. We had a rate of ascent like this back in the past. And then again, the fundamental news of everything going on right now, added to the fact that just the everyday knowing of the amount of inflation that has been, real inflation, money supply increase that has been going on since, well, really back in here. So the market went up and it's had this long sideways correction for just a short period of only about 9 years. A short is sarcastic. I mean the opposite word of that. But 9 years is not sarcastic. That is actual math reality. So you break that trend. That's the normal knowing of key A, B, point A, point B, key low. And by the way, we even have a key low down in here back in 1960, between 68 and 72. Around 72, I would guess. 35 bucks an ounce. 35 bucks an ounce up to here, down to here, up to here. Yeah, there was these lows in here, but we'll just count a whole series of them. But 250 is this key low in here. Key high, key low, and now where's next key high going to be? Well, I might as well do something like this and start talking about, oh, what about this trend line? Because, you know what, let's draw that up and show where we are. I got to see that one. And I haven't even drawn that one in. Let's change the weekly and just see what the monthly looks. What's this monthly? Okay, well, first let's go like this. Let's go like that. Let's go like this. And scroll it down like that. I am so curious to where that trend line is now. I'm going to find out. Okay, make sure I can see the numbers. I can. That can't be near 10, it's going to be near 10 grand maybe. I don't know. I haven't looked at this trend line in so long. Yeah, it's near 10 grand. Holy shit. I wouldn't be surprised if that's a target level. I really, really wouldn't be. We talk about where the next key high is. And then this is a moving number too. Into 2022 or 23 kind of deal. But as it goes right now on the next type of movements in here, this 3, 4, 5,000 level, it wouldn't surprise me if it doesn't take that long to happen. I talked months and months ago about the ratio of gold to silver on the early parts possibly going well north of 100, 150-ish or so. It wouldn't surprise me, and it would be a move like this that would do it. And then silver after that, I think, would be extremely interesting. Now, gold on the yearly term time frame is actually a pretty interesting chart when we take a look at it. That's what I want to take a look at next, and I will. So let's go like this. Before we do that, again, let's take a look at this on the monthly chart, just how it's just breaking out, just a phenomenal one. We'll do quarterly as well. Quarterly is a great format as we've got, or setup. As after this move, this is what I call holding and staying within the 18 average. And oh my goodness on this one, because originally on the April of 2013, 2012, whichever, this period here, it ends up, and it would have been 2013. April 2013, we have a 23% down move, getting below this 18 of lows. But, I mean, look at all this empty space. That's not like it's a big surprise or a big thing. As long as we hold this low, it's not the biggest of things. But, I mean, what's up with this? It barely goes below it, and it doesn't spend much time below the originally established support at 1185 area. Okay, what's up with that? I mean, I'm trying to think of this in a like comedic kind of voice that I can't even come close to even doing. Anyway, it's neutralizing this band out and then this excitation and just continuation, but on not such large green candles, and the potential for them to just at any ASAP any given time right now is tremendous. But the yearly term time frame on gold is pure excitation of major relevance. Kilo, key high, kilo, key high, correctionary phase, excitation of correctionary phase right now in this spectacular bull market. Okay, anyway, let's move on to silver. And within its yearly time frame, same as gold here. There's no excitation of this 18 on the yearly. Rather, point A low, point B high, and point C low and point B high. I'm not going to do point D high. It's not a higher high. It's a matching high. The fact that I'm saying a matching high from something that occurred over 40 years ago, it is as it is. With, of course, all the real inflation or creation of fiat currencies on a global level. But as it is with the charts, there we can see from correctionary move, there's excitation on the 18 in here. Go to this high, come back to the lows intra-period, and then have a leg 2 higher, back to the 18 average of lows, and this is 1, 2, 3, 4, 5. We're near 6. We're pretty much in looking at price action at the 18 average of closes. I don't got it drawn in, but you can pretty much state it's right in the middle of this area. Okay, so excitation of the 18 average of highs is over 26. Excitation of the 18 average of lows is under 12. That's the yearly chart. Quarterly term, excitation of the 18 average of highs is looking like it's in play now. It's attempting that right now. Because I'm just amazing setup here. 2 periods ago, that completed ago right here, where it gets above this flat from barely declining 18 in here. I mean, not as impressive as gold, but still impressive. Definitely a little bit of empty space filling from this low, and then making a higher low from 2008. But how it consolidates near the 18 average of highs like this and the continuation right now, really 60% of the way through this quarter, 35 days and 17 hours to go, is a phenomenal setup as it goes. On the monthly term, this is a phenomenal setup again. This is just screaming out fantastic moves. But is it going to be one of those situations where, okay, gold's at like 5,000 and silver's at like 32, and there's that 150 to 1 type ratio? I've been thinking about that for a long time now. Whether it is or not, the market's going to do what it's going to do. But as the setup goes, to me, this is just a fantastic setup on the monthly chart. Fantastic setup here on the weekly. Within, you can see just from this rally that completed at the end of September last year, how we've been holding and staying with what's really generally been a flat 18 average, establishing resistance at the early part of January, successfully with support here at the end of January, and now exitation attempt in February. So this week that's what we're looking to do. So far, so good. We got the 18 average of highs and lows, both rising over the past several periods or several weeks. That's a fantastic situation. This support here did not come back to this level of support, meaning it did a bit better. If it wanted to come back to where it came from, it would have had to do so between 16.16 and about 15 and a third. Rather, it did so at 16 and 3/5. And resistance established in here. Well, we have some at 19 and 2/3. It didn't get up there, not as of yet. It looks like that's pretty soon to come. We also have some of this from the 2016 highs at 21 even. Before that, we have a lot of this congestion here at 21. And you know what? Breaking above that, there's really not much more after this. This 20 to 21 and so range is pretty much it up until the next key level, between like the 26 to 30 area. But it does seem to me as if we are heading to the most upper end of the range of resistance that it has had and support over the last 7 years amongst this market. And now let's insert the Fibonacci lines and move it to the daily term, which again, they're showing it not coming back to where it came from, and that's just one of those interesting spots. It's a 50% retracement bottom at this stage, where multiple times, even with this pierce below here, was like 47%, 40 whatever percent retracement. This resistance high of 1876 was tested on January the 8th. And I talked about 1740 way back in September. These are lines I drew. I've put these lines in now for like almost a half a year. I haven't deleted them because until the key high or the key low changes, and the key low is way down here at 14 and the key high is this, then they're valid. Breaking out above this resistance is going to be this. Remove drawings. I'm not going to push that now because they're still valid. We did come up in today's session to this point, retracing back lower. So now we're in the middle of middle of no man's land to a degree. If we have any continuation week lower, then the obvious spot is this 18 and a quarter level, which coincides with the newly rising 18. Going a bit deeper below that, the must hold, like we have higher low here, we have a low here. Higher low did come in at 1823 or 1740 rather. So I mean, a higher low again, you'd be looking at 1787 as your must hold based on this low in here. I would really like to see the 1823 down to 18 even, really 18 be a support area hold if it's going to have any retracement. But we've had a decent amount in here. We've had 1, 2, 3, like so many different hits in here, and then this is a big fall at 2 o'clock p.m. Eastern time. And it's whatever, might have been a bit of profit taking, all that kind of stuff. That's normal when markets go up. Your portfolio is higher for a lot of people, and of course, however you manage whatever large numbers you have for the big money to do this is what's being done. We're still hanging in there with the 18 average on the low end in here, and so yeah, we've established support here and here. If this conjunction area fails, 18 and a quarter is the next level of support. Getting out above like 1878, now we're talking about a short-term barrier at 1909. Then we're talking about short-term barrier at 1930, and then after the 1930. We go back again talking about this high in at about 1958. Then, of course, all those levels like 20 to 21 after that. And that is the silver analysis as well. as the completion of this video, one that doesn't show a crypto chart, but that will change probably later on in today's session. Have yourself a great day. Bye-bye.